Very good morning to you and welcome to the Business Lens on Rapid Television, Abuja. It is great to have you with us on this edition where we look at how all the numbers and figures directly affect you and your businesses. My name is Divine Alex. So let's begin with the key business trends that matter right now, starting from the headlines. Nigeria exported 105.5 billion naira worth of petrol to Togo in Q1 2026, marking a major shift in the country's downstream petroleum trade as domestic refining capacity expands. The data from the NBS Foreign Trade Statistics report shows petrol became one of Nigeria's key exports to Togo, even as concerns emerge over reports that some Nigerian marketers are importing Dangote produced petroleum products through the Lome trading hub. Now, the development highlights that a new dynamic in Nigeria's fuel markets, moving from decades of petrol import dependence to a system where Nigeria is becoming a regional supplier, while questions remain around the structure of cross-border fuel trading. Now to the next, where we have a reaction from the Dangote Petroleum Refinery that has denied claims that its exported petroleum products are being re-imported into Nigeria through the offshore ship-to-ship trading hub in Lome, Togo. This is according to a statement that was released on June 23rd. The refinery described the allegation as false and said that available trade flows and commercial realities do not support the claim. The controversy comes amid a major shift in Nigeria's downstream sector, where increased domestic refining capacity is changing traditional fuel trade patterns across West Africa. Now, away from that, we move to the next, where Nigeria has approved fresh petrol and diesel imports for Q3 2026, which spans across July to September 2026, as regulators move to prevent possible supply disruptions despite growing domestic refining capacity. And according to reports, the approvals were granted to major downstream operators amid concerns over declining fuel stock levels and reduced gasoline output from the Dangote Petroleum Refinery. Now, this development highlights the challenge of balancing Nigeria's transition toward local refining with the need to guarantee consistent fuel supply nationwide. Now, away from that story, let's move to the next one that says Nigeria's gas export earnings rose to $2.53 billion in Q1 2026. This is up from $2.24 billion in Q4 2025, according to the CBN balance of payment highlights. Now, the increase reflects stronger performance in the natural gas sector as Nigeria continues efforts to diversify foreign exchange earnings beyond crude oil. The growth comes amid renewed focus on gas as a strategic resource for exports, energy security, and industrial development. Now, away from that, let's move to the Securities and Exchange Commission, SEC, that has ordered capital market operators to stop promoting a supposed initial public offering, which is the IPO, by Dangote Petroleum Refinery and Petrochemicals FZE, stating that the regulator has not received or approved any application for such an offer. This directive follows the circulation of investment materials, including digital adverts and flyers, promoting what appeared to be a public share sale of the refinery. Now, the SEC's action raises fresh questions around investor protection, market directive, market regulation, and the growing interest in Africa's largest refinery as investors look for opportunities in Nigeria's energy sector. Now, away from that, we move to the next. Cash outside Nigeria's banking system increased to 5.19 trillion naira in May 2026, despite ongoing efforts by the Central Bank of Nigeria to drive digital payments and financial inclusion. The data from the CBN shows currency outside banks rose by 109.34 billion naira month on month from 5.08 trillion naira in April and grew 12.07% year on year from 4.63 trillion naira in May 2025. This increase suggests that a significant amount of money remains outside formal financial channels, raising questions around trust, cash dependence, and the pace of Nigeria's cashless economy transition. Now, away from that story, let's head to the next, where we have the Federal Airport Authority of Nigeria FAN that is considering extending the deadline for airport cab operators to upgrade their vehicles to October 2026, giving operators more time to meet new service standards. The move, they say, follows concerns raised by private cab operators over vehicle upgrade requirements and revised airport charges. Now, FAN says the adjustment is aimed at improving passenger experience and raising service quality across Nigerian airports, among others. Now, let's head straight into the markets, where we have Nigeria's equities market on Tuesday extended its recovery as renewed investor buying pushed the NGX All-Share Index up by 1.06%, gaining 2,524 points to close at 240,743.19 points. Market capitalization increased by 1.64 trillion naira to 154.48 trillion naira, driven mainly by strong performances from large and mid-cap stocks, including Airtel Africa, GT Coal, Transcorp, Lafarge Africa, and Zichis Agro Allied Industries. Now, the rally signals renewed investor appetite following recent market volatility. Now, we will look at those stories and more after the break. My name is Divine Alex. Stay with us. You are welcome back. This is still the Business Lens Rapid Television Abuja. My name is Divine Alex. Now, Nigeria's economic story this week is centered around one major theme: the transition from dependence to capacity, and whether the systems supporting this transition are strong enough. In the energy sector, we have Nigeria that is moving from being a major petrol importer to becoming a potential regional supplier with 105.5 billion naira worth of petrol exported to Togo in Q1 2026, while still approving fresh fuel imports for Q3 2026 to protect domestic supply. The debate around the Dangote Refinery, Lumi trading hub, crude supply, and fuel imports show that refining capacity alone does not automatically solve market structure challenges. And again, beyond petroleum, Nigeria's gas export earnings increased to $2.53 billion in Q1 2026, highlighting the growing importance of gas as an alternative FX source. However, questions remain around how these resources translate into broader economic value. Meanwhile, the financial market is also undergoing major shifts, from the SEC stopping an unapproved Dangote Refinery IPO promotion to the NGX recovery, adding 1.64 trillion naira in market value, and the CBN reporting 5.19 trillion naira cash outside banks, showing the ongoing tension between market growth, investor confidence, and formal financial participation. And joining me in the studio is Daniel Efa, who is a global business analyst. Good morning, Daniel.
Good morning, Divine. It's good to be here.
It's good to have you here. Now, you heard the headlines when I went one after the other. Nigeria exported 105.5 billion naira worth of petrol to Togo, and we had the regulators, talking about fresh petrol imports approved for Q3 2026. What do you think this shows?
Okay, so I think when it comes to us being able to have exported that much, that's around maybe $10 million in exports. It's a good start. Remember, I think that when we say we did, I think it should be emphasized in the fact that that's the Dangote Refinery doing that. How much of it comes to the Nigerian government is yet to be, but then it is FX earnings, right? And which is what we really want in terms of reducing the pressure on our FX earnings and being able to increase our reserves as much as possible, so that in case of any intervention in terms of defending the exchange rate at any point in time, we are positioning ourselves properly, right? However, I think the only conversation I have in terms of worry is the fact that we are dealing with only Dangote Refinery, where we have a lot of other refineries, and it might not become it might start looking very attractive for new refineries that want to set up because of the total focus on the Dangote refinery. But in terms of what it is contributing to our trade balance, our balance of trade, balance of payment, it makes a lot of sense that we have the refinery at this point in time.
Okay. Now we have on the call Abiola Adekunle, economist Abiola Adekunle from Keto Markets. Good morning. Can you hear us? Good morning, economist Abiola. Can you hear me?
I can hear you. Can you hear me?
Yes, I can now. Good morning. Now, what is your take on this conversation that we're having around the fact that we have exported and then we also have fresh, regulations around the petrol?
At the end of the day, we need to do what is favorable to the Nigerian people. I believe in, first of all, servicing the local markets. Then we can now start talking about excesses being exported. And if we can satisfy the local markets, I don't see any reason why we need to also be dependent on imports. There have also been a lot of rumors around the fact that petrol is being sold, PMA is being sold at a cheaper rate from the Dangote refineries to neighboring countries, and that we have importers and marketers now importing the same for coming back. But like I said, these are just basically rumors. We have not been able to substantiate any of them.
Okay. Now, we also saw the reports that Dangote Refinery came out to say that, we don't know anything about this. But before we go into that particular conversation, what percentage of Nigeria's domestic petrol demand do you think can current local refining capacity actually meet?
I think they can meet 100%.
Okay.
Because one thing I found out about the local consumption is that there is always some form of, I don't want to say conspiracy, but political motive behind it. If the government introduces subsidy, for example, today, back into petrol, I can bet you see 100% rise in consumption. And it will be that the consumption is not actually rising by 100%, but people actually want to now claim the subsidy, so they jack up the numbers. So as it is, I actually believe that the local production we have, including Dangote refineries, can satisfy our local demands for petroleum products for now.
Okay, let me come back to you, Daniel. Now, at what point do you think that Nigeria can realistically move from supply security through imports to full domestic self-sufficiency?
I think that, just like you said, I think that us importing petrol has nothing to do with local refining capacity. I think it's just trying to ensure we keep to the liberalization policy that we've introduced into that sector, right? Because more often than not, if I am a marketer or if I am an wholesaler, no matter the kind of relationship I have with my producer anywhere in the world, I will take products that are closer to me because of costs. Right? I would as much as possible want to reduce the cost of whatever I'm doing and get supply from closer to wherever I am. Right. So in an economic sense, it's only ideal that that most of our local demand will come from Dangote refinery because it is closer, and any other refinery in Nigeria, because that's why I said earlier that the focus on Dangote refinery is really killing off the other at least over 200,000 in combined capacity production that we also have with other refineries, right? So at the end of the day, that is where we would still get to. But for now, what we are trying to do is to ensure that we also do not create a monopoly conversation with the refinery, right? Because if you create a conversation with the refinery, that is already eliminating the concept of energy security that we are pursuing. With the PIA that was signed into law. So no matter how you look at it, the liberalization would allow healthy competition, would ensure that prices are fair for the consumers to actually consume. Just like you said about the local consumption, I also personally feel like it is being overestimated. Why? I think that this US Iran issue exposed a bit of it. Why am I saying that? Okay. I think that if there's even an outcry online now about the fact that the prices are not coming down as they should, based on the fact that when prices were at $69-70 per barrel at the beginning of the year, this was how much Nigerians bought petrol. Right now that it is back there, this is how much it is being sold over 1,000. Right, so the concept is simple. Right, overestimation ensures that the marketers are able to import way more than what we need, right? And that's why they get a lot more licenses. I remember in October, November, they got about licenses to get about maybe 2 million, 3 million liters in, right, in October, November. And I'm sure those were not sold, because as at the same November, Dangote Refinery had done almost 90%, was it 90% local demand supply, right? So that means these marketers had this petrol saved, right? And by February, March, when the whole Russia crisis started, there was no conversation about import bill anymore. So that means they basically sold petrol that was meant to be sold at maybe 800 and sold over 1,400. So these issues are still happening, and now that it is back to crude oil is back to less than $70 per barrel, we are expecting the prices to go back. But the conversation is still around the fact that we bought this fuel at so price, so we have to probably finish our current stock before we are able to bring prices down. So what it just exposes more and more is the low regulatory approach, right? So if you want to deregulate a market, that means that government is saying, let everybody come and play. When everybody come and play, there is also an economic problem that arises from that, which is the fact that if everybody come and play and they all agree to play together, that means they can begin to get to a point of exploitation of the people they are meant to serve, right? So that is the phase we are in at the moment, and that is why it is a big issue, right, for the refinery, for example, the refinery and all the marketers, for example, to begin to play by the rules the Nigerian regulators have set. So we cannot have regulators now sit back and just watch. You have to be the referee of the game, because the people are your own concern in terms of them getting fair value for whatever spendings they have. So it is your job to ensure that their welfare is being catered for through the so-called liberalization that you've allowed everybody playing. So, for example, the issue of Togo and all this conversation coming is because of lack of regulatory, because regulators should have actually identified that cannot happen in another country. That cannot happen in the US, for example. You cannot see a US company or maybe a Shell or something in Europe and do that kind of thing across the border, sell something cheaper and somebody is bringing it. It's not possible. So the conversation will only happen when regulators are quiet about the conversations that happen in the sector they are saying everybody should come to play in.
Okay, and I think it is also important to note that the moment the whole conversation on the US and Iran having the conflicts, everything went up.
Exactly.
So at that time, which means that they've not been able to buy petrol at the current price when it went as high as 102 and up. Now, I think the speed that these people use to increase
the prices.
They're supposed to apply the same speed to reduce it the moment it comes down. That is a big gap, and they really need to find something around it. Now, speaking of Dangote Refinery that has denied claims that, its products are being re-imported through the Lome, as Nigeria also becomes a regional fuel supplier. Mr. Abiola, what transparency mechanisms do you think are needed to track petroleum flows across West Africa?
Thank you, Divine. I think that to a large extent it has to be manual because I always say that tankers are not ants. You cannot smuggle hundreds of tankers across the border and something would not, be picked up. So they have to first of all investigate the systemic movement, if at all it exists, of such products across borders, and also the systematic way of doing it. What I mean is, things like this cannot happen without some level of collusion.
Okay. There
is no way that every sector is doing their job. Customs, immigration, everybody involved, border control are doing their jobs, and let's say 50 tankers will just pass a particular border. It's not possible. Also, you can find a way to do check and balance. That means to have alternative form of monitoring. What do I mean by this? This is 2026, and there's a whole lot of technology available. I've seen individuals on their own take their drones, to search forests, search areas for whatever, the particular thing they are looking for. And here we have a whole government that can also do far, far better than that. So we can have a way in which we can do area monitoring of our borders, even across, some of the other West African states, if we are permitted by their governments, and if there's a joint, what's it called? If there's a joint cooperation between them. So what I would, in a nutshell, summarize is, first of all, there has to be a monitoring from the particular agencies that are in charge of that. Number two, there has to be some level of area monitoring, because we are not looking for pins, we are looking at movement. Just like when we're talking about our crude oil being stolen. And I was saying that what do you mean by crude oil is being stolen? Crude oil is not something that can just be stolen. It means that a whole vessel will come to our shore and load and go, and you say it's being stolen. No, it's not being stolen. Is people are colluding to do it. So the same thing for this. Let the agencies that are involved do their work, because if there's no collusion, nothing like that will happen. Secondly, the government, I'm talking about federal government now, can also deploy area surveillance and understand more about what exactly is going on.
Keyword.
Just to add to what
go ahead.
said, to be very honest, there is nothing legally wrong with any marketer importing from anywhere. The only reason why we are talking about this is because it's from Dangote, right? So the question, right, and the reason why I'm surprised Dangote is coming to write a rebuttal to the conversation, it sounds even more suspicious. It even gives you a vibe that it is real, because every rumor we've heard about the oil sector in the last 5 years or 6 years has been true. We've heard rumors about swap, crude oil for petrol swap. It came out to be true. We've heard the Malta conversation, came out to be true. We've heard crude being stolen. Every of those rumors have always come out to be true, right? So whether it is true or not, if I am a refinery, right, I am not a marketer, right? Dangote is only doing the marketing job in Nigeria. Nigeria is the only place where, in fact, it's not even the marketer. It's the only time he bought trucks so that they can be able to disburse to the marketers easily. He's not a market, he's a refinery. A refinery can sell anywhere anywhere it wants to sell to, right? Whoever is buying, it's not Dangote's problem. So the only issue that should arise from this conversation is, how is it that you're selling to Togo, right? And it is way cheaper, and there's more incentive for someone bringing it from Togo to Nigeria. That is the real conversation. That is where the pricing conversation should come in. Now, why should a marketer in Nigeria, right? A marketer in Nigeria not have it cheaper than someone that is receiving it in Togo? That is the real and that is where the pricing agencies should come in and say, what is really happening? If we are giving you a naira for, we are on a free trade zone. You are basically what you have a naira for crude deal with us. Why is that even a rumor in the first place? And that is the real. That is where sanctions should even be coming in. That's what I'm saying. This cannot happen in other countries. It's not possible, right? If a refinery in Spain, for example, is producing petrol and selling to Nigeria cheaper than what it is selling, it's not possible. So that is the real conversation that really should be that should be held. Whether it is true or not, the pricing mechanism should be looked at. It should not just be when Dangote Refinery releases a report. That is when we know what the prices are. No, there should be a proper auditing tool. As long as it is being sold in Nigeria, there should be a pricing conversation that should come in. It shouldn't just be based on whatever the company wants, because even before the crude conversation, the petrol conversation, there have been also the conversation about around cement, for example, that cement is cheaper across Africa from the same company, you get, in recent times. So it is a pricing conversation that needs to be done, because I remember when we had subsidies, right? It was almost a criminal act for our own local marketers to ship to start driving tankers across borders to go and sell in another country because ours was cheaper and the demand was there. So if that same thing is happening, that is an unfair trade practice that should be talked about, whether through the FCCPC or the main NMDPR. They should be looking at these issues, and that is the real conversation.
So now about that, should NMDPRA and customs and other agencies, look towards publishing more detailed petroleum movement data, at least so that we could be able to look at all of these things while we now hold accountable the agencies that are supposed to sit over the pricing conversation?
Of course, they are the ones that should really do this. It is the regulators. That's why I started earlier. I said, in a space like this, right, the work of regulator doesn't get easier when you allow free market movements. The reason why subsidies help countries like ours, which is a mixed economy, is that government was already placing a cap on some things, and nobody can try to go beyond such, right? Countries like the US that have strong capitalist strong capitalist systems have strong regulatory bodies. We see their SEC, you see their consumer protection. You see all those bodies are there to ensure that if you do anything, you are sanctioned almost immediately. You see, in fact, most times they sanction you before you now go to court to
explain yourself better.
Exactly. So that is how it should be. Or else, what we'll eventually do is that what we think that we did by having a Dangote Refinery versus marketers in quote to make the market a bit funny, the price they were doing price competition, it will go back to being a cartel again, with Dangote Refinery being the head and the marketers being the sub members. And that is what we are already getting to right now. Because how do we explain? Because whether we like it or whether it is Dangote Refinery fuel or not, as long as our marketers are picking petrol from Togo, there is a likelihood that it is Dangote Refinery, because Dangote also sells to the trading hub in Togo. So if marketers cannot ship directly to our own sea, right, to bring in fuel via the ports, if it has to go through Togo, which is the true land, it is still a problem. It is still a challenge. So these are the things that needs to really be solved, because if you have a very passive regulatory bodies, you cannot. Your people will always suffer extortion and exploitation.
Okay, let me come to you, Economist Abiola. Now, when we look at all of these things side by side, could regional trading hubs become a bigger part of Africa's energy markets going forward?
Just come again with the question. Sorry.
Could regional trading hub become a bigger part of Africa's energy markets going forward?
Yes, definitely. Africa, especially I like to speak about West Africa first. I've always been, closer, and I feel that ECOWAS should have done much more in pushing for West Africa to be seen as a unit. Once we are seen as a unit, it is easier, for people to push out more, because now there's no segregation, there's nothing cutting us apart. And if you can achieve this, you find out that the output from West Africa, then Africa, will be much more. But for now, Africa has been divided, especially in terms of movement. What do I mean? If you have to take a flight from Nigeria to South Africa, you will be shocked that it might be much more expensive than if you have to take a flight from Nigeria to Europe. Now, I think in the last episode, there was a time I was talking about, connectivity and productivity.
Mm-hmm.
The more a country is connected, the more a continent is connected, the more the productivity can be. If you look at China, look at their train connections and network, you find out that it's extremely much. And one way or the other, it assists and helps them in their productivity. So if the African hub, can be much more connected, especially West Africa, first of all, you'll see that we will have a higher productivity in every sector: energy, oil, manufacturing, what have you. So yes, I believe it can be, but we have to solve these problems first. Number one, connectivity.
Number one, connectivity. Thank you so much for that. Let's take a swipe to Nigeria's gas export earnings that rose to $2.53 billion in Q1 2026. Now, let me come to you, Daniel. Can gas realistically become Nigeria's next major foreign exchange driver beyond crude oil?
Yes, I think it can be, not necessarily the next, it can be the main for the next for the next 50 years. Why? Okay. Because as we move into renewables, gas will come into the forefront. All right, from 2030, most countries are leaving the traditional drilling, drilling from the ground, crude approach, and really tilting towards gas. And we have a lot of gas reserve. We have more gas reserve than crude. And yeah, and I've always clamored. I think from 2020, I've always clamored for we need to have a proper gas. Even yeah, there is a gas plan, but how fast are we to achieving the gas plan for 2050? Is where the real conversation is. And that is why I usually say that most of all these plans should be law, like so that no matter the government that comes in, nobody abandons the plan. Everybody still works with the plan, right? Because whatever makes us get our gas supply plan right, we are likely going to earn 2 billion is even small. We can't do 20 billion or 60 to 80 billion a year. Because the capacity is there, the market is there, right? There is a large market of the global north, the global north that and the Western countries that consistently need gas, way more than we do, right? And we've seen the crisis that have wrecked those regions in recent times. From the Russian crisis, we see the kind of demand that would come. So. We should see this as a long-term approach, as a big business that we should really be cashing out on, right? And I believe that at least 2 billion is not a bad figure, but we can do more than that, and we should double down.
So how does this 2 billion now compare with Nigeria's crude oil export earnings?
And so I think we
place them side by side.
Side by side, and when you look at the cost, right? Look at the cost side by side, you will see that gas is costing us less. All right, crude is costing us more, and and that is why I keep saying that we need to push the gas more. If we push the gas as front burner, we're likely going to get more FDIs than we get for crude. Right, we have a lot of divesting. We had a lot of divesting from the crude oil sector from 2020 because of the whole global movement towards renewables. Right, but then side by side, you realize that. There is a potential for growth when it comes to gas compared to crude. Crude is capped, right? But gas, the cap is not yet there in terms of what we should produce or what we shouldn't produce, and the market is larger, right? So when you look at where do we sell our crude to, in terms of even cost, in terms of demand, right? So you compare it to gas, you realize that yes, we still have this market that is still upcoming, that can still do good numbers. Just like when we were in our peak of crude oil production, we were doing 2.5 million barrels a day. Right now, we are struggling to even do 1.5 million barrels per day. But we are seeing the opportunity with gas, where we are even at this time we are still on a trying to build a pipeline across transatlantic pipeline that would go through Morocco to Europe. So the opportunities is still there. Like, it's still very large. It's still largely untapped. In fact, we've not even scratched the surface when it comes to gas conversation. And that is why I'm very optimistic that even when our crude oil conversation start dwindling down, and OPEC is saying you have to reduce cuts, you have to reduce your production to maybe 1 million barrels, for example, and when prices are very low, we still have gas as another resource that we can really tap into.
Okay, gas as another resource. Now, let me come to you, Economist Abiola. You know, we've said this over and over again that we have more gas than we have crude, even when we talked about the electricity challenges. But now, what infrastructure gaps are limiting Nigeria's ability to maximize this gas value?
When it comes to gas or any product at that, the doorway you use in entering into the room, how big the door is, determines what we call the flow, okay, of either the supply or demand. If, for example, I have a big warehouse and that warehouse has a very small door, even though I might have 1 million products in that warehouse, If I can only move one product out of the door per minute,
Per once.
that would be my supply rate. So it is not good enough that we have a very large reserve of gas. What we need to focus on is how much of that gas can we supply per day, which is very little. Because the best way to supply gas is for you to build pipelines. And, for a long time, gas has been the quiet giant, the gentle giant. In fact, without any confirmation, I feel that there might even be some form of cabal in the whole thing, because you hardly hear conversations about gas. And there's a lot of money there for the country. So we need to start running pipelines, not only the white elephant projects, like, let's run pipeline to Europe, no. Even within Nigeria, if you travel out, you'll find out that in most, Western countries or developed countries, you don't carry gas cylinder up and down. Gas is already wired, is already piped to your apartment. You pay for it the way you pay for water, the way you pay for any other thing, electricity and all that. So while we are doing the supply outside, we should also start looking at how to supply, do the pipes to major hubs in Nigeria for two things. Number one, for generating power. Gas is a good way of generating power. All these deficiencies we're having in power and hydro generation, we can fill the gap, with gas. So one of the infrastructural gaps is that we don't have enough gas pipe moving around the country itself. Let's even live outside. Let's satisfy ourselves first. Number two, is domestic. We have, if we cannot go into individual houses, we can start from clusters, hotels, apartments, places that we know that they can actually afford to do these things, but they can't do it if you don't even run major pipes to that area. For example, there are telecom agencies now that offer different types of products. But when you ask some of them, they'll say, we have not gotten to your area first. So even before you can draw, let's say, from the major pipeline or from the major cable for the telecom, for example, into individual houses, that major cable has to get to your place. And this is the work of the government. So the government has to start looking both inward and outward at the same time, because they can actually multitask. So while we are doing the big rail to go, outside and cross whatever to other countries, let's also look at inside. The level to which we can supply gas per day would determine how much we earn from gas. And for now, I'll say it again, it is very small.
It is very small. Thank you so much, Economist Abiola, for that contribution. And thank you so much, Daniel Efa, for being on the show this morning with us. Now, Nigeria's economy is entering a new phase where capacity regulation and investor confidence will determine the next chapter. My name is Divine Alex. Stick around again for another episode of The Business Lens on Thursday at 11 a.m. For now, bye for now.